Mark Sebastian of Option Pit Mentoring joins us now with the Trader Rundown as we make our way through the week, but already some wild action. There were points in the market yesterday, for instance, when the VIX was up, stock market was up, and bonds were up. That's unusual.
Yeah, you know, there's a lot going on. I think the market's really confused. We're right near all-time highs, and they're talking about rate cut. You know, Goldman's out saying, you know, we've got fewer, we're not going to have any rate cuts. There's others. Market's predicting 4 rate cuts.
Wow.
You know, then we have G20 coming up.
Right.
But we've got pretty good, decent GDP growth. Corporate earnings were pretty good the last quarter. So what to do? And
right.
You know, what I'd say is the volatility we've seen on rallies has really been the part that I think is a little concerning. At one point, we were up over 155 points in a 5-day period. That's like 31 S&P points a day. That is huge daily movement, even with the S&P up at 27%. That is just a lot of commotion. You know, I'd expect to see that type of price movement on a sell-off, not a rally. And it just shows you how, you know, money kind of gets out and then just piles back in, and then gets out and then piles back in. So we've just kind of seen the market's lungs completely expand full of S&P 500 exposure.
Right.
So now the question is, you know, how much of an exhale is there? Because I think that we're seeing one start to develop. And my guess is it's not that big, 1 or 2%, maybe a day or two. But that'd be a good thing with how fast we rally.
Question about the bond market. Investors are watching the bonds. What do you think the play is here?
Well, you know, I think irrespective of what the Fed does, I think rates are going to go lower. Over the next 6 to 12 months, because Europe looks like it's going to start, you know, more actions, more bond buying, everything they can. Japan is doing everything they can, and so even with you know, the Fed funds around 3%, we're back to where we were with 0 and buying bonds. Why? Well, because the bond market is a global market. It's not just a U.S. domestic market. So
True.
I think that international pressures are what's going to drive bonds higher from here.
Good to have you here. Thank you so much.
Thanks for having me.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.